This will by far be the most exciting video I have ever done. Motorcycle financing. How debt to income and credit history come into play. What's up everyone? It's Alex. Today's video came from a viewer question from Tristan, and Tristan said, I have a question, so I have a bike in mind that's around $6,500. Equifax calls my score a fair credit score. It's not bad by any means, but it isn't great, more like average. I don't have a long credit history. I've got about $1,200 to put down, but I can't find a co-signer to help me. What are my odds of getting the loan? And I answered Tristan back days ago, but I wanted to make this video because I've been getting this question a lot. And I know a lot of you that come here for the regular motorcycle reviews and stuff, this may not be super exciting for you, but when I have something like this where I get the question all the time, I need to make a video so that people have the information out there, because I think it's really important to be armed with information when you're trying to finance a motorcycle so you don't get screwed. That being said, if you like the video, if you find this helpful, like and subscribe because it tells me that it's helpful to you guys so I can keep making videos like this for you. So, motorcycle financing. How does debt to income and credit history affect it? Here's the important stuff you need to understand. I get so many new motorcycle riders or people trying to finance a motorcycle that have a decent credit score or have a decent amount down and don't understand why they can't get financed or why their financing terms kind of suck. And here's the thing. When it comes to a motorcycle, the finance world views a motorcycle as a luxury item. It is a recreational item. It is not a need, it is a want as far as the financial world goes. It's not a house, it's not a car, it's a toy or a recreational item, not to me, but to the financial world. So, generally speaking, with most lenders and most places you're going to get financed for a motorcycle, your debt to income ratio is fairly important to them, and your length of credit history on major loans is fairly important to them. Most of them are going to look to your debt to income ratio, and if you spend almost as much money as you make or as much money as you make, they're not going to look very favorably on that as far as financing you for a motorcycle. So for instance, say you make, just out of the blue, you make $5,000 a month, right? That is your income. And your debt obligations every month, meaning your bills, what you have to pay every month, is $4,000. That's a pretty high ratio to your income, and someone wanting to finance you or looking at financing you on a recreational vehicle, luxury toy, like a motorcycle, they're not going to look very favorably on the fact that you spend almost as much as you make. A lot of credit unions and places that are going to give you a good rate on a motorcycle, to be honest with you, most of them want to see a debt ratio under 50%. The lower the better. So the lower your monthly bills or your debt ratio is to what you make, the better when it comes to financing a motorcycle. So if you're in a situation right now where you want a motorcycle really bad, but your bills are almost as much as what you make, you need to work on getting some of those paid down and getting that debt load reduced some before you try to finance a motorcycle. Because even if you find a finance company that's willing to take the chance and take that loan for you with a high debt to income ratio, you're usually going to get a way worse interest rate and you're going to get a much higher payment. You're going to pay way more in the long run because you're paying so much more interest. So get that debt to income ratio down. A lot of places won't even do it at all if you're over 65 or 70%. The ones that will, it's going to be high interest. So try to get your debt to income ratio below 50% at least, I would highly recommend before financing a motorcycle. So whatever you make a month, you need to look at what your monthly liabilities or bills are and what your debt load is versus your income. You need to understand that. I know it's a little bit more complicated of a thing, but you need to understand your debt to income, how much you have financed versus what you make, will come into major play when trying to finance a motorcycle in most cases. The other huge thing that most people don't seem to understand that really trips up, especially newer riders when financing a motorcycle, is going to be your length of credit history. I'll have a lot of people come to me that are maybe 20 years old or something like that and don't have a very long credit history. They'll come and say, hey, you know, my credit reporting says I have a 700 credit score and I can't get financed on this motorcycle. I'm like, well, what have you financed before? Have you ever financed a car? Have you ever financed anything big? Have you had a decent sized credit card for a couple of years? Have you had a secured loan somewhere? And they'll go, no, I mean, you know, I pay my electric bill, I pay my cell phone. I'm like, well, that doesn't really count as far as being a big loan for credit history goes. Now, sometimes you will find motorcycle lenders that will do a first-time buyer program. Honda used to be really big on this with their Honda Financial for having a first-time buyer program. And there are some credit unions, some other lenders that will do a first-time buyer program and will take a chance on a young credit history person, someone without very much credit history, and give them a first-time loan. But again, they're going to charge more interest generally for that loan. When Honda used to do it, the interest was considerably higher on a first-time buyer loan than it would be normally. So generally speaking, as a rule in the motorcycle financing world, what they want to see is they want to see at least 1 to 2 years of constant fluid payment history on some type of major installment or revolving loan before they're willing to give you a good chance on a motorcycle loan. That usually means they want to see a year or more of good payment history on a car or an auto loan. If you own a home, then you're usually beautifully square as far as that goes. Or a lot of times they will look at a kind of larger credit card, meaning they don't want to see a year's worth of payments on a credit card with a $100 limit. You need to have a credit card that's got a little bit higher limit on it and make good payments and keep your balances low for a year or more before they're willing to take a chance on it. But usually, a year or more of a good car payment history is going to be kind of shoo you in for motorcycle financing. So I hope that kind of helps explain that. Like, a lot of people will get tripped up. They'll be like, I make great money, I have plenty of money down, and they just won't give me a good loan. What's the deal? Like, well, what's your credit history? They want to see that you already have a history of being able to make your payments on time and being able to keep up with some type of fairly major loan to prove that you're responsible and you can handle it before they're willing to finance you on a recreational toy like a motorcycle. So those are the two big things that I've been getting so many questions on lately that I don't think I've covered so well in a video before that really trip people up, especially first-time buyers, new buyers, to getting a motorcycle. So on top of having a decent down payment and having a good income source to show, you need to take into account what is your debt to income load ratio, and you need to take into account what is your length of credit history. If you don't have a long credit history, usually your best option is going to be to get a cosigner that has a long history, because they'll tack them onto the loan and that will help you in the long run. Don't just settle for a loan with really, really crap interest rate, etc. because you don't have those things. Work on those things first before you get a loan, or the better option is save up your money and pay cash for a bike. Get a little bit less expensive bike at first so you've got something to ride, and then save your money for the bike of your dreams, or at least get an inexpensive bike at first and then work on those other things. So if you are going to finance a motorcycle, at least you can get good financing terms and not get screwed on your interest rate and end up paying twice as much for your motorcycle, okay? Please, guys, listen to me. Do these things. I hope that helped. If you have more questions, please put them in the comments down below. I know for the rest of you, if you've made it this far, this was not a motorcycle review, something else you want to see, but I need to do these videos too to help out my newer riders and help people not get screwed on their financing. I think it's my responsibility to impart that knowledge when I can. So that's it for today. Have a great day as always, guys. Ride safe. I'm Alex. Peace.